This is Alan Bush with ADMIS with the daily financial forecast for Tuesday, January 12th. In the stock index futures, we are seeing prices higher this morning. This directly due to news that the People's Bank of China attempted to support the yuan, which they were successful in doing. So we have seen a tendency, in fact, a very strong tendency for stock index futures to trade directly with what is going on with the Chinese currency, especially in the last couple of weeks. As has been the case in every other geopolitical event since the lows were made in March of 2009, even though stock index futures have been under pressure and technically look weak, I think we will see ultimately a recovery and eventually new highs for all of the major indices once these geopolitical problems are relegated to the back burner and as interest rates remain low globally. Now, moving over to the currencies, seeing the dollar index trading higher. This also directly due to the strength that we are seeing in the Chinese yuan today. And there's a very strong direct correlation between now the dollar and the yuan, as is the case again today. Also, we are seeing some pressure in the pound after UK industrial production coming in weaker than expected, and flight to quality longs are being liquidated in the Japanese yen, with the yuan stabilizing and stock index futures trading higher this morning. Also, there was some strength in the Canadian dollar and the Australian dollar, with the crude oil advancing, although it looks like some of those gains given back in those two commodity currencies as some of the strength in the crude oil now is being limited. Now, moving over to the interest rate futures markets, we did see lower prices in the overnight trade, especially at the long end of the curve. This due to higher stock indices, also a stabilizing yuan, tending to be bearish for the long end. Some short covering coming in more recently. We do feel that longer term, the main trend is lower for the 30-year bonds, especially in light of the Fed likely to raise rates at least 2 more times this year. Also, as the global economy firms up and as the U.S. economy also does better. So look for lower long term in the bonds, and I think this is a trend that will probably last for quite some time. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.